Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. We're looking at a one-year daily candle chart of the Spider Dow Jones Industrial Average ETF, ticker symbol DIA, and I've left my support and resistance lines on the chart from last week so you can see exactly where the market is positioned, and then from there we can draw our forecasts into next week. First and foremost, I want to make sure you know that Monday is a national holiday. The markets will be closed for President's Day. So we have a shortened trading week next week, which could very much add to the volatility, mainly because traders tend to condense their trading activity into a 4-day week now versus a 5-day week, and that could contribute to more action in the shortened trading week, like I said. Now, if you look at the candles here, we saw a green candle on the close for Friday. Thursday, we had a doji. Now, for those of you new to candle charting, a doji is usually found at pivot points. You can see back here there was a doji, and the sign represents a point where there's indecision between the buyers and the sellers. That's a battle that usually takes place, and then we have a green candle that follows that. So my expectations for next week is that we will continue to bounce off of this support level and then move up to test the most recent resistance, which is right here. We'll have to see whether or not we break through that, but I do believe that we'll see higher prices in the shortened trading week, so expect a short-term rally. Now, if we look at the spiders, this is the S&P 500 ETF, ticker symbol SPY. You'll see same thing happen. We bounced off the support on Thursday, almost to the penny. I drew that line from the low back on January 20th, and we held that as a support level with another green candle. So I expect that the spiders will move up to at least retest this resistance, and I'll leave that line up there next week so we can see whether or not it played out that way. And then we'll have to make a decision to see whether or not the market pulls back from that point or goes back up to fill this gap. So again, short-term forecast is that we'll rally into the shortened trading week next week, and then we'll reevaluate from there. If we look at a more broad-based index, that's the Russell 2000, you'll see that we did bounce off of the support that I drew from this low, and we have a very strong bullish pattern that is very close to a bullish engulfing pattern. On Thursday, we formed a hammer pattern, which again is bullish. So my forecast for next week is going to be short-term rally. I'll leave that line right there, possibly moving up to test that resistance. Now, this doesn't mean you take all your cash and go back into long positions, because technically we're still in a downtrend, or at least a topping pattern that could bring us into the next big bear market. So I'm giving you these numbers so that you could move forward with caution, and at the same time using the charts to manage your risk with maybe some protective stops. I'll get into that in a little while. So if we look at the Qs, that's ticker symbol QQQ, power shares. It's basically representing the NASDAQ market. We have, again, some green candles on Thursday and Friday into the close of the week. The drop in volume here tells me that the sellers are slowing down. So I'm expecting, again, just like the other indices that I mentioned, a rally up, maybe not this high into the NASDAQ, but certainly a retest of that resistance. So this cross right here, or this intersection right here would be my next target point before we make any longer term forecast in the market. Finally, the VIX. The volatility index, in my opinion, is the best leading indicator that you can get. It works contrary. It's a contrarian indicator to the S&P. We're at resistance on the VIX, so I think that the VIX will pull back a bit to retest this support level. Now remember, it's a contrarian indicator. So if the VIX is pulling back, that is short-term bullish for the S&P. And I've already gone over those charts to tell you that I think the next week is going to have a short-term rally. So keep this on your watch list. It's a great tool for really forecasting as a leading indicator, and we can move on from there. move on from there. If you'd like to learn more about some of the things that I've mentioned already, just go to themarketguys.com, click on the video tab right there. It'll bring you to a library of short videos that we use and we call market shots. They're 3 to 5, maybe 7 minutes long, and you could really get a handle on some of the terminology that I'm using. You can look at head and shoulders tops, which is what we're seeing right across the board. We're seeing this quite often in many of the individual stocks and even the general markets. So these are the signals that I pay close attention to, and I spend a lot of time teaching people how to really forecast on their own so that your percentage of accuracy will go up each and every month and each and every year. So that's all we have for now. Thank you for joining us for the Market Report. We'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our trade alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.